Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO stock and where it could be headed in the future. In this video, we will be analyzing 3 articles, to where the first one is titled, NIO stock, don't worry, sales goals are attainable, says Morgan Stanley analyst. So we'll be dissecting this article regarding how after the second half of 2023, this company is primed for future growth. We'll also be going over their latest price targets, price predictions, and news updates. After that, we'll be analyzing an article titled, NIO stock, a rare chance to get rich. So I'll be adding my own personal opinions, and I'll be weighing the bearish and bullish scenarios for the future of this overall company. Lastly, we will analyze an article titled, Is Now the Time to Go All In on NIO stock? Some investors believe that it's okay to go all in on a risky growth company, so I'm going to talk about proper risk management and why NIO is a good company. However, it doesn't necessarily follow that you should go all in on any company, let alone NIO, because that would be improper risk management. So for more videos just like this one, remember to go and annihilate that like button right now, comment your thoughts down below about where you think NIO and their share price is headed in the future, subscribe for more NIO stock news, and without further ado, let's jump right into today's stories. NIO is an electric vehicle company located over in China, and right now, the share price is falling because investors were less than impressed with their recent financial results, particularly in regards to their most recent quarterly earnings report. The company delivered larger than expected losses, which has disappointed investors. However, recently, a Morgan Stanley analyst thinks that there are several factors indicating that this company could make a giant comeback during the second half of 2023. I have briefly touched on this in a prior video, and now it's good to see that some analysts are also catching on to my overall bullish thesis on this company. The Morgan Stanley analyst says, and I quote, on top of the 5 upcoming models to expand NIO's product offering as both volume drivers and brand shapers, the accelerating deployment power swap network and the fast iteration of NOP+, which is Navigate on Pilot, assisted driving software could meaningfully enhance the user experience and hence drive vehicle sales to NIO's monthly target of 30,000 units by the end of the year. End quote. So this analyst is very excited about the new models that are set to come out during 2023 for NIO, which is going to act as a phenomenal catalyst to not only increase their overall revenues, but also translate into a higher share price for this overall company. On top of that, it's anticipated that NIO will not have a very positive Q1 of 2023, meaning that their next earnings report is not slated to be very positive. That would reflect in their share price going further down, maybe between $5 to $6 potentially. However, that would be the best time to buy this company because after Q1 and Q2 of 2023, once we get into the nitty-gritty details of Q3 and Q4, which would be the second half of 2023, this company is expected to bounce back very aggressively, and here's why. During Q1 and Q2, the company's overall vehicle deliveries and vehicle margins will be negatively impacted by macroeconomic factors over in the Asian markets. However, the company is anticipated to bounce back during the second quarter of 2023 and beyond. The company should also benefit from their plan to invest into 1,000 swapping stations, to where 300 of these power swapping stations will be built into quote-unquote Tier 1 and Tier 2 cities, essentially very high-end cities. Another 400 power swapping stations will be distributed and placed alongside major highways, to where then the remaining 300 will be built into lower-end Tier 3 and Tier 4 cities. The analyst believes that NIO will be able to provide enhancements of their user experience regarding their charging stations, and the word-of-mouth marketing for these stations will provide a meaningful increase in not only their overall brand awareness, but also the people buying their overall vehicles. I am very excited because this power swapping technology is very innovative, and it's something that a lot of other electric vehicle companies just don't have. The reason why the battery swapping stations are better than superchargers or fast chargers or regular chargers is that not only does NIO also offer those products, but the power swapping stations can either replace your old battery with a filled battery, upgrade your battery, or do other things, replacing your battery in a lower amount of time than it would take to charge an entire battery. Meaning that instead of spending a half an hour at a charging station, you could literally spend less than 10 minutes at a battery swapping swapping station, meaning that the battery swapping station is significantly faster. But what does this mean for investors? Let's start talking about their price targets. Right now, the NIO stock price is trading at $8.43. However, this Morgan Stanley analyst has an overweight rating for this company, which is a buy rating, meaning that NIO shares could explode up to $16.10 over the next 12 months, according to this analyst. This would mean that the company is primed for approximately 91% growth, growing at 9 times the general stock market, making this a phenomenal buying opportunity. But what do other analysts, professionals, and experts in this field believe NIO is actually worth? Well, 5 Wall Street analysts say to buy the company, and 4 Wall Street analysts say to hold the company over the next 12 months, while none of the analysts or professionals or experts that were surveyed say to sell this company, and that is phenomenal news. These are also recent price targets from analysts and recent ratings on this company within the last 3 months. The average price target and price prediction for NIO stock is $15.42, and that would still equate to approximately 83% upside for this company, meaning that NIO is substantially undervalued. And like we said, their approaching earnings report isn't anticipated to be very positive, meaning that the share price would go lower, meaning that the slingshot effect for this company's shares during the second half of 2023 could be a phenomenal investment opportunity. Now, there is something that I want to make aware to you. I personally have a price target of around $12 for this company for the remainder of 2023. These higher end price targets, ranging from $16 to $25, come from analysts who are not very reputable. More reputable analysts, such as a 4-star analyst from Bank of America, has a $12 price target, which is substantially more realistic. However, he still has a buy rating on this company, and he thinks that the company has 42.18% upside potential, which is absolutely amazing. I am still very bullish on this company, and if the company's share price could surge from $8.43 up to $12, that would be amazing, which is why I still really like this company. However, is NIO a stock that could make you rich quickly? Does NIO stock give you the opportunity to become wealthy from just this company? Well, recently, NIO has attracted a significant amount of investors, even though they disappointed investors from the recent earnings report. And this, paired with macroeconomic factors, has caused the NIO share price to drop by around 52% over the past year. But with that being said, there is immense growth potential for this overall company. As you probably know, China is the world's largest electric vehicle market, and NIO is an electric vehicle company located over in China. And the Chinese EV market is exploding. It jumped from just 2.99 million in 2021 to where it's forecasted to be between 8 million to 8.5 million in 2023. So clearly, there are going to be multiple winners over in the Chinese electric vehicle market. But that's not to say that NIO does not face harsh competition. There is very strong competition from other Chinese EV makers and even Tesla. However, with that being said, there is plenty of market to go around for all of these companies. NIO had phenomenal delivery numbers for 2022 to where they delivered 122,486 units, which represents a 34% increase from 2021. The company is also making huge strides over in Europe regarding to their infiltration of the Norwegian market, the German market, the Netherlands, Denmark, as well as Sweden. And as time goes on, I anticipate that they will further penetrate and grow within these markets. Now, with that being said, there are some risks. First, it's a foreign company. You're going to be investing into ADR shares and shell companies to get access to these Chinese companies. Secondly, if anything were to go wrong or geopolitical tensions were to increase between the United States and China, this is going to act as a negative catalyst for Chinese stocks, including NIO. Thirdly, I would want to mention that one of the biggest concerns for NIO is their net loss, which totaled around $2.1 billion, which represents a 260% increase in their net loss from 2021. And this would be mainly due to their increase for their research and development expenses, which surged by around 117.7%. But hopefully, this research and development will lead to better vehicles being produced, more vehicles being sold, and more revenue coming in to offset this net loss. However, it seems that NIO is overspending right now, which is a risk that investors need to be aware of. So then this begs the question, can NIO stock make you rich? Well, honestly, in my opinion, it would depend how long you're willing to hold this company, how NIO's management ends up forecasting their overall projections, and how well the company does compared to their competition. However, we, as smart investors, need to weigh the risk to reward here. I don't think NIO should be a company that investors invest into thinking that it's going to make them rich quick. Although I think NIO is a good company, I would not allocate more than a 4% allocation to this particular company. Now, clearly I could be wrong, and the author of this article actually agrees with me that NIO is not a golden ticket to get rich quick. Also, normally people who get rich quick lose their money just as fast. So always make sure to practice proper risk management and don't overexpose yourself to any singular risky growth company. Lastly, should investors go all in on this stock? I have read comments about people going all in on this stock or this company making up well over 20% of someone's portfolio, and let me just tell you, that is improper risk management. That is not how a proper investor invests into companies. You need to always be practicing proper risk management so you are not exposed to potential unnecessary losses. Now, don't get me wrong, I am very excited for the opportunities in the electric vehicle market, and I do personally own NIO stock, Li Auto, Tesla, and BYD. I don't own XPeng. I don't really think XPeng is a very good company. However, as investors, we do need to weigh the risk to reward. And this is how we're going to do that for NIO stock. First, before we invest more into NIO, we need to see if their management is keeping their promises. For instance, the company says it expects to deliver between 31,000 and 33,000 vehicles in the first quarter of 2023. This would imply a sharp drop from the more than 40,000 units the company delivered in the fourth quarter of 2022. So this would not be a positive development quarter over quarter. But again, like I said, we need to get past quarter 2 of 2023 until this company starts to actually ramp up their overall growth rate. So investors who are wanting to buy the stock may want to wait until after the quarter 1 earnings report or even the quarter 2 earnings report before NIO starts to consistently ramp up their production and sales numbers. So NIO is going to have to aggressively pump out some new models that really resonate with the overall investor demand, and this could positively impact the company. Luckily, NIO is doing just that, but until we get some results pertaining to how successful their new models are in the market, we can't really make an educated decision as of right now. Now, what I do like about the company is that their newest electric vehicle, which would be their ET5, features extremely competitive and impressive battery life and range, meaning that they are outperforming companies like XPeng and a couple other electric vehicles over in China. I also think that their unique battery swapping program and technology, where they offer changeable batteries, chargeable batteries, swappable batteries, and upgraded batteries, give investors the opportunities and the tier list that they need. Lastly, besides the biggest risk of geopolitical tensions, the company is worrying me that their revenue is going up while their overall net income is going down. Normally, you would want to see these positively correlated to where if their revenue goes up, that their net income also goes up, but that's not what we're seeing. We're actually seeing a negative correlation here, and that is not good. They really need to kick this, otherwise they could actually be worse off in the future because their net income loss is actually increasing instead of decreasing. But I think at the end of 2023, we could see a reversal for this. Lastly, I want to end on a high note. NIO trades at a price to sales ratio of just around 2, making them a much better value buying opportunity for a phenomenal growth company than other electric vehicle startups, both in China as well as over in the United States. Now, again, I don't think it's wise to go all in on NIO stock. That would be improper risk management, and I would not go all in on any single stock. But if you have a well-diversified portfolio to where you nickel and dime and nibble at a plethora of phenomenal companies, you are set to almost guarantee to win over the long term. There will be slight sell-offs after quarter 1 and quarter 2 regarding NIO's earnings report, and the macroeconomic economy is very unreliable and hard to predict, especially over the short term. But over the long term, it seems that NIO has a great growth trajectory, and they are meeting their overall promises. As time goes on and the production numbers increase, which are already higher than many electric vehicle startups over in the United States, NIO is a worthy competitor, and I think the future looks very bright for them. So is NIO NIO stock worth a look at these levels? Absolutely. And I think the company is just going to be a better buying opportunity after Q1 and Q2 of 2023. And then after that, the company is primed for future growth because the company, in my opinion, is undervalued based off of their PS ratio, which is an accounting ratio which compares their overall market cap to their sales, as well as how this company is competing with their competition. So I would love to hear your thoughts down below. NIO is a great opportunity for an investment, in my opinion, as long as you're willing to hold the company for the long term. I'd love to hear your thoughts. Smash the like button for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.